Hello guys, you welcome to my YouTube channel, and in today's video I'll be teaching briefly on supply and demand. Supply and demand. Now what do I mean by supply and demand? Well, in Forex, demand can be referred to as willing buyers, while supply is referred to as willing sellers. Of course, in our Forex chart, we have what we call the demand zone and we have the supply zone. A demand zone is a zone with a large pile of buy orders, and you also note that a demand zone is always below your current price. It's always below price. Supply zone, on the other hand, is always above price. It's a point in your chart where there is a large pile of sell orders waiting to take the market. So in simple English, so that I would not want to bore you or confuse you with much of this economics grammar. When you in your day-to-day life, when you go to a shopping mall, you could just simply say, all right, I'm placing a demand for, shall I say, 3 cartons of Indomie, 3 cartons of wine. That means you want to buy. So demand has to do with buying. Don't forget that. Don't I don't want you to mix them up, and that's why I'm making this illustration. Demand has to do with buying. On the other hand, when you meet somebody and the person is saying something like, okay, I'm going to supply my goods. I'm supplying. It means I'm selling. The person is selling his goods in large quantity, or in a large order. So supply has to do with selling, while demand has to do with buying. All right. You should also take note that there are particular ways to which to identify the demand and supply zones. But before we go there, let me just all right. You should also understand that demand and supply is the force that drives price action in a market. I want you to hold on to that. Demand and supply is the force that drives action in a market. Now, when you check your forex chart on a Saturday, there's nobody placing any demand and there's nobody supplying, and that's why you see that the market is standstill. When market resumes on Monday midnightish and session, suppliers sellers begin to take over, demand them, buyers begin to drag the market, and then there's this contention. And then in economics, there's what we call equilibrium. And equilibrium is simply a state whereby the number of suppliers equals to the number of buyers in a market. You have 50 people willing to supply, willing people also willing to buy. It's like equilibrium. And this is exactly what happens when you see a doji candle. A doji candle is a candle which shows indecision. That is, there is equal number of buyers and suppliers. Well, you might not really understand, or you might peradventure you're not familiar with what a doji candle is. Maybe in my subsequent videos you would get to understand. It's one of the candlestick types that we should understand. Doji. So doji simply expresses the equal number of buying and selling. So there it is. It's just long wick above, long wick below. So like I said earlier on, demand and supply. When there is demand, that is, there are much buyers, that is when you see that the price is it's on a bullish trend. When the sellers take over, that means there is more suppliers. What happens next? You see that the market goes on a bearish trend. Now, like I said, there are zones. We have the demand zones and we have the supply zones. The demand zones are always below price, most always below the price, and the supply zones are always above the price. And then it is mostly important for you to know, for you to understand how to identify and plot the zones. Now let's go to our MT4 charts. All right, this is my MT4 chart here. Let me take this off. I have AU here, Australian dollar, US dollar chart, 4 hours time frame. This is live chart, but my internet connection is off right now, so the price is not moving, but it's a live chart. All right, so I'm showing us how to identify and plot our zones. Remember, I said when you want to, if you are using phone and you want to make a good analysis, always make sure that you tilt your phone to landscape mode. Tilt your phone into a landscape mode. Now, if you look at my chart, you see there this, yeah, this rectangle here, this, and then something similar here as well, a smaller one. You should understand that you use rectangles, we call them rectangles. Use rectangles to map out your zones. And then how do you do that? Tap on your screen. You see this button here. I click on it, and then this is the additional option. You scroll to the down and you click rectangle. When you click on rectangle, just tap it on your screen and adjust the screen. You can see there is a dot here. Now when you hold it, you can try to just drag it. It will expand as much as you want. Can you see? And when it expands, there are three dots by the left, center, and middle. It shows that it is still, when you long press it, it is editable. Can you see? It brings out this option for me to edit, but I don't want to edit. So you tap it, it brings those options to edit, and then when you tap it back, the three dots leaves. That means it is you've logged it to the chart. But if I leave it like this, it is, can you see, it is movable. I can move it to wherever I want to. Let me take this off. You move this to wherever I want to. So let me delete it for now. Let me delete this as well for now, and let me leave just the one up. So I said I'm going to be showing us how to identify these zones. All right, but first of all, majorly you should look out in your on your chart. Look out for, should I say, I won't call it the swing guy. Okay, identify where there has been an obvious change in trend. That is the most important thing. And where there has been an obvious change in trend. Now let me put this off. Let me put this off. All right, now there's nothing here. Let me take away my trend line as well. There's nothing here. Now, looking at the chart from here now, open my chart. From here, it was there was a, okay, from here price went upward, and then at this point there was an obvious change in trend. It was so obvious because the fourth candle here was, an impulsive move, and then the price went down till it got to this place, and then when it got to this place, what happened? Price started going back to the upside. So this point now, I'm going to mark it as a demand zone, because literally if you look at the screen, it's like, it's for this screen, this chart right now on this screen, on this time frame, it is my swing high. Sorry. Okay, so this is a point where I'm going to mark out, and remember I said you tap the screen, it brings this option out. You tap this. Oh, sorry, I tapped the wrong one. All right, this one, click on add and scroll down, rectangle. I pick it here and I just tap it on my screen, and then I try to draw it. Now, if I had drawn this even before price got here, you would see that price respected the supply zone. Remember, I said that supply zone is always above price. It's always above price. So now this is my supply zone. I drew it, and then yeah, I got it to this point. Let's say now when you're drawing your supply zone, you just look at, all right, you cover. All right, okay. Let me just hold on with that for now. So I've picked it from here. Now I didn't pick the whole. I didn't pick the whole of this place. I only picked, the tip. I will explain. I would show us why that is that later. So this is it. Now you can see that when price went down, at this point price, there was a reversal again back to the upside. Now this point is also another zone, and because it is below price, it is on the downside. It is demand zone. Remember, the demand zone is always down, supply zone is always up. Demand zone is always high, supply zone is always at the upside. So I've drawn it. Can you see it's neatly drawn? Now you look at when price came down here, it touched here and it went back up. It went back up, and when it got to this supply zone here, it respected the zone, although there was a little bit of liquidity grabbing. Yeah, liquidity was taken just a little above the supply zone, which is normal. I want you to also take notes that, when you're trading with supply and demand zones and you're placing your stop loss, you should understand that there is always much of liquidity grabbing on supply zones and demand zones, and that is because mostly it is always a double top or a triple top. And if you look at this, this is a double top, the first tap and then the second tap, and then they know that most people will be waiting at this point to sell. They know a lot of people waiting there, so they know a lot of people would have set their sell orders here, and then because of that, they expect that a large number of people would have their stop loss just a little above the zone. So the market makers will ensure that price goes and kicks out some people, some sellers before moving downwards. Now, if you look at it move downwards, it's still ranging around. It looks like it's going back again for the third test on that same zone. So that is simply how you draw your zone. On below as well, you can see anytime price comes back here, price falls down back to this point, what you're expected to do, expect to buy from that same zone with your stop loss maybe average 20 pips below. If you're selling from a supply zone, just keep your stop loss averagely 20 pips above. If you're buying from a demand zone, 20 pips below is fine. It depends on your account size. You can as well decide to, and depends on the time frame you're trading on. You can as well decide to use 30 pips, 40 pips. Depends on your account size because um because of your account size. So that is how to plot it, which is the most important thing. A lot of people always have issues with plotting supply zones and demand zones. Now, if you look at this, all right, okay, I won't talk about support and resistance now. Maybe in frequent videos we'll be talking about support and resistance. But the main thing you should understand is that the demand is always at the. I wouldn't place my demand zone here in the middle of the chart when there is the lowest low here and there is the highest high here. So it's always mostly at the edge of the chart and at the bottom of the chart where it could form a double top, triple top, or a double bottom or triple bottom. So I said number one, identify where there's an obvious change of direction, change of trend. You can see that where this is there was a change of trend, and where this there was a change of trend back as well to the upside. Also, look for reversal candle and draw your rectangle to cover the top to bottom of that candle. Look for reversal candle and draw your rectangle to cover the top and bottom of that reversal candle. The same rule applied here. If you look at this one I drew initially, here for in case you understand candlestick patterns and candlestick analysis, over here there was a reversal candle here. Let me see if I could zoom out. All right, this here, after this impulsive move into the supply zone, the next and the third one is a reversal candle. Yeah, that's a reversal candle there. And then if I were to draw it properly, I'm meant to make it cover that reversal candle. That is the right way to draw it. So it's meant to cover the wick and the body of the candle. Okay, I think that is too much, too much, too much. Okay, still too much. You don't want to have your chart looking so rough with paint everywhere. So ensure that, can you see now that I covered exactly this particular. Let me zoom properly. Can you see? This is the reversal candle. I covered it exactly, both wick and body. And then when you cover it, just draw the lines to ensure that the line covers it, and then you draw it straight like that. And also for the demand zone, something similar. If you look here as well, this is a reversal candle as well at the bottom here. Yeah, that is one reversal candle there. That's an hanging man. It's called hanging man. Sorry, it's an hammer, not an hanging man. It's an hammer. This is an hammer at the bottom here, and then you can see my rectangle covered exactly the body to the wick of the candle, and then I just draw it out straight, waiting for when next price will come, and then once price gets into this place, it taps and then it goes in. And then, of course, there is a much similarity with this demand and supply strategy with other blocks. Other blocks is one major, strategy in forex that I won't be talking about as well in this video, but maybe in subsequent videos. So, like I said, majorly number one, look out for where there's an obvious change in trend, and number two, look out for reversal candles and draw your rectangles to cover the top to bottom of that candle, including the wick. All right. Also, another way to identify your zones is look out for area of consolidation. What do I mean by consolidation? A consolidation, is a period whereby price begins to trend sideways. It's just trending sideways. It's neither buying nor selling. It's just on a sideways trend, and then that happens for long. When you see such, yeah, let me see if I could just find anywhere like that. where such happened. Okay, I can't really find any of such. Okay, something like this looks like it. Now look at, let me bring out my rectangle. This looks similar. It was a range. Can you see? It was just a range that happened for hours. You can see it was just trending sideways, and after the sideways trend, there was a massive breakout to the downside. There was a massive breakout to the downside. Now that is an example of, when you just see consolidation anywhere, sideways trend that lasts for long. And you should understand that the longer this accumulation or this the longer the ranging lasts, the more massive the breakout to be. There are times that the sideways trend will continue for 3 days to just keep ranging inside the same box. But when it's going to break out, when it's going to break out, it's going to always be massive. So that is another way as well to identify whenever you see the consolidation, you see where price has been trading sideways for several hours, and then suddenly, now look at, suddenly when price shoots down, that place like that, it is a zone on its own. Once price shut down, the place automatically became a supply zone. If I draw, this, okay, let me, can you see? When price came here, it's almost was going to respect it, but I guess for some other reasons, it's after resisting price finally broke through. So we should understand that every supply zone and demand zone can be broken. The fact that it is there does not mean price cannot break through it. For instance, when price comes down to this demand zone, don't think it is automatic or it's compulsory that it rejects price. Price might get here and then it breaks through it, and then it goes lower. Once a demand zone is broken and price is below, the demand zone has automatically become a supply zone. As well, can you see, if I put on my internet, price is ranging around the supply zone. Peradventure, if price breaks through it to the upside, this supply zone is now a demand zone because price is now above it. And what do you do in times like that? When, for instance, price comes here and breaks through it, it is now a supply zone. What do? You wait for price. Don't rush to sell immediately. Remember, don't rush to sell immediately. Wait for price to come back and tap into this same zone again. This, which is now a supply zone. Wait for price to, let me see if I could make it. Okay, yeah. Let me use my cursor. Now imagine price came down like this. You thought it was going to, you were supposed to buy, and then it went up a little deceptively, and then suddenly, impulsively, it broke through, and then price is below. This zone is no longer a demand zone, it is now a supply zone. Now what do you do in that case? You just patiently hold on. It might be for hours, minutes. Just hold on for price to come back. Price will always come for a retest of this zone. Once price gets here, enter your sell order and put your stop loss 20-30 pips above, and then expect price to continue selling. The same way as well, now that price is just above, still ranging around here, if price breaks through, because it's possible for price to break through, there's another block here that needs to be mitigated. So there's much assurance that price is likely to break through. Now if price breaks through to the upside, this is no longer a supply zone, it is now a demand zone. What will you do? You hold on for price to come back and retest this zone. Once price gets here, just enter a buy position and put your stop loss 20-30 pips below the zone, and then you expect it to keep going in the upside. So I think those are the major things that you need to understand. With the understanding of this few points I've noted, trust me, you're good to go. But you should also understand, don't forget, like I said earlier on, supply zones and demand zones are always, places where we have double tops, double bottoms, triple tops, triple bottoms, and then there is always much of grabbing. Liquidity grabbing happens so much there. All right. Another way to identify the zones, demand and supply zones, is wherever gaps happen. Well, that might not be necessary. Gaps doesn't really happen so often, so it might not be something you want to really focus on. Now you should also understand that wherever you see price rush into and rush out is a demand zone. Now look at this. Look at this on the daily time frame, you can see that from here price rushed into it impulsively with one candle, and the same way rushed out of it with one candle. Now that place already, it's a supply zone. That is another way to identify supply zone. Let's look at other places where we can find where price rushed into a place and rushed out. Okay, let me see. I'm not comfortable. I'm looking for something more interesting. Something more interesting. This I'm doing a back test to see if we could find somewhere where price rushed into and rushed out. All right, let's see this place on a 4 hours time frame. Oh my God. All right, now look at this place. Now look at this place. Price rushed into this place, and the price rushed out as well. Price rushed in and rushed out. Now I could take that place as a demand zone. Price rushed in, you can see, and rushed out. And of course, I won't want to cover the whole. I could just cover um, this, the wick and the body of this one. Now let's draw this forward and see what happened each time price. Let's look at price action. When the price came here, it was going to tap into that zone, but it didn't. It went up, and then sorry. Okay, where is the thing we're working with? Okay. Oh my, I think I've lost. I lost it. Okay, sorry. Here is it. Here it is. Now let me do it on a larger time frame where we can see it better. All right, this is a little bit messy, but I just hope you get the points, which is the main thing. Now, if I draw this continuously, it's kind of messy trying to draw it. But if I keep drawing this, and I'm very sure that at a point price must have reacted. Price must have reacted to it at some point. You see, if you look here, when price got back here, there was a reaction around it as if it was going to. It broke through it. It came back for a retest, and then just to grab liquidity, price came down, and then it went back before finally breaking through, and it just kept ranging around it till it went down. A lot of liquidity must have been taken in this place, because when price was coming here, a lot of people must have been waiting to buy here. They would have put their stop loss here, and then the market makers must have kicked them out by hitting their stop loss, and then they'll be like, oh my god, I didn't know it was going to sell. So they'll be waiting to sell, and then when price went back up here, they'll be expecting to enter a sell position, and their stop loss would have been here. And of course, the price went a little trickishly, so they will feel like, yeah, it's about to sell. And suddenly, price just went back up and hit their stop loss, and they're like, oh my god, what just happened again? I thought it was about to sell. And then they are confused. And then, after it has kicked out liquidity on both sides, price finally went its way. Can you see? Now, that is why I said you have to be very careful with supply and demand zones, because those are the points where liquidity is being grabbed the most. So I think those are the major things. I hope this video has been helpful to you in one way or the other. If you have, you can always drop your comments and like this video, as well as share the video. Thank you. Please, if you've not subscribed to my YouTube channel, please kindly click on the subscribe button below your chat.